Welcome back to another episode of the Full Subjects Podcast. Today, we are talking about a scenario that we are seeing in the marketplace fairly frequently, unfortunately, but we wanted to do an episode on this because if you are a listener, you might be experiencing this as well. And it's something I think that is worth talking about. Full disclosure, kind of sucks to talk about. We're talking about equity loss on a home that you purchased. I don't mean to laugh, but all jokes aside, and in all seriousness, a lot of people in the marketplace are seeing this right now. You know, maybe they purchased in 2021 or 2022. Maybe they had a larger down payment, and maybe they're wanting more space now, and or maybe their situation's changed. They are wanting to make a move. They're, like I said, their situation has changed, and we want to talk about what that potentially looks like. So this will be a very interesting episode. Probably won't go as long as some of the other ones that we've done, but we kind of dubbed this "Should We Stay or Should We Go" as kind of the episode title name. But what we really want to talk about is the position that you're in, and if you do want to move, what that looks like, and is it possible, and if it is something that you really want, how can you make that work? If that makes sense. Cole, does that make sense? This is a good time for you to jump in.
It makes sense, and you know what? If it doesn't make sense, well, let's make it make sense. How about
Okay,
that?
yeah, well, we got like 20 minutes to make that make sense. As always, guys,
Big,
this
hold on, big.
podcast.
There we go. I was gonna say big question, Austin. Do you want to throw a little disclaimer in before we
Yeah,
get going?
yeah. Hey, what a segue. As always, this podcast is for informational purposes only. It does not constitute any legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. Didn't even go for the remix today. I just
Stuck to the script.
stuck to the play, stuck to the root. Cool. Let's talk about this scenario because I know you were talking about this with me the other day. So yeah, let's break this down and let's kind of jump into the scenario here.
For sure. Yeah. For all intents and purposes, guys, this is a hypothetical situation, but we're trying to use numbers that are reasonable given the dates that we're using and given
Mhm.
given the market that we're talking about. So this is not a specific example, but it's a general example with reasonable numbers to use. So we're going to look at April 2023 and we're going to compare it to April 2026. So very simple, 3-year time difference. We're in April as of recording this. But let's break down the situation really quickly. So we're going to assume a couple bought a condo back in or an apartment back in April of 2023. We're going to say at the time they bought it for 575,000. Unfortunately, prices have gone down since then. Now we're going to say it's worth half a million. So we're going to say it's worth 500,000. Quick math there, Austin. Change in value down 75,000. Most people would not be happy with that, and that's totally reasonable. And that's not the point of this discussion today. It's just to use some real numbers here. And just a little bit more on that. So we're going to assume that at the time they put 20% down. So they would have put $115,000 down, which meant they would have had a $460,000 mortgage. Over that 3 years, we're estimating they paid about 20K off. And at that time, we're estimating the rate was about 5.25, so 5.25. And then last but not least, based on that rate, we're assuming their payments about $2,750 a month. That's the situation. They bought the condo. They're paying $2,750. Unfortunately, they've lost some equity. Awesome. What do you want to add to that before we jump into a little bit more?
Yeah, obviously this is scenario based, but just for
Yeah,
reference too, I have the stat center pulled up. So let's
perfect.
talk about like what HPI price difference roughly might be. In April of 2023, and obviously we don't have the April stats yet for 2026. So let's just maybe do March. So yes, we're talking about different months. Bear with us. So March 2023, HPI price for condos in the Fraser Valley was 513,900. And then in March of 2026, it was 489,200. So yeah, again, a little bit of a split. You could do it by percentage. There's a couple other things that you could look at. Obviously,
hmm
some areas would have potentially been hotter than others. But again, just a quick example, and we wanted to reference not only the example from the that we pulled, and again, it's not anybody specific. It's just numbers that we've kind of chosen. I'm sure we could find buildings or actual comps if we
Yeah,
wanted to, but
100%.
just to reference that also with some stats, some like legit math, if that
For
makes
sure.
sense.
Yeah,
Yeah.
no, I appreciate that. And honestly, this example of the condo is probably on the more extreme side in
Hmm.
terms of the drop in value. But I think for argument's sake, it's not a bad case to make here because, well, as you guys will see, we're going to make an argument why it might not be as bad as you think, I guess is what I'm trying to say. So net equity right now, assuming you've got a 440K mortgage, and you can sell at 500, that's market value. That's what somebody wants to pay for it. You got 60K of net equity. Now, as Austin can definitely speak to, and as I can also speak to, you're not going to walk away with 60K,
Mhm.
unfortunately, because there's a cost of doing business. Part of that on my side, and I'll let Austin speak to the sales side in a second here, is you're likely breaking that mortgage early unless you had a 3-year mortgage, which means that you're probably going to pay, well, you will pay a penalty if you're breaking that mortgage early. So that's going to be a small factor in this. But Austin, can you maybe speak to an approximate cost of selling, say, a 500K unit and what fees and everything might equate to on that?
Yeah, typically, those fees can range from, again, it's really tough to give there's no
Yeah, I
standard
understand.
amount. There's different people that charge different amounts. It can be anywhere from an average of like 2.5 to, like, I've even seen 3.5 or 4% of the total, what some people do. So again, that's just quick, rough math of the
Okay.
sale amount.
Okay. Yeah, no, that's totally fine, and that's reasonable because it's not always going to be the same. But the point is, you're not going to walk away with 60K. There's going to be some extra costs associated with making that move, and part of that is the selling of your home, and then the other part of that is, like I said, if you break the mortgage early, there will be some cost to doing that. So, with that in mind, you're going to walk away with a certain amount. We're not going to quote an exact amount for that because it's going to vary a little bit. Uh,
Mhm.
but now let's look at a different part of the scenario. So back in 2023 of April, this couple was trying to decide, okay, we buy a condo now or should we buy a townhouse? We don't have kids, we're just looking for a place to live. Does it make sense to buy something that we can grow into at the time, or does it make more sense to buy something that we need right now, with the expectation that hopefully over time the value will appreciate and then we can move up at that time, and at that time it also keeps a little bit more money in their pocket. So totally reasonable to do that. For assumption purposes, Austin, we're going to use 800K as the townhouse price in 2023.
Mhm.
Uh, and if and I'm gonna use some numbers here. So if they were to put 20% down at that time at the same rate of 5.25%, because that's a reasonable rate to use at that time, their payment would have been about $3,800. So
Mhm.
almost more than $1,000 more for that larger product, and obviously that's a significant additional amount of cash flow that they would have been paying. So what are your thoughts on that, Austin? When we're talking to people, or when you're talking to people more specifically about a situation, and they're like, I don't know what to do, Austin. Should I do this? Should I do that? Maybe just speak to some of the things that you like to ha- to give people to help them navigate what the right decision is for them.
Yeah, so a lot of it comes down to, like, obviously, like you mentioned, there's a moving cost,
Mhm,
associated with that. Obviously, during that time too, you're paying your mortgage, and some of that is obviously going to be going towards your principal loan amount, and some of that will obviously be interest. But a
mhm,
lot of it too is like, do you need all that extra space? Do you need that garage? Do you need that? 3 levels? Do you need the yard? Or is it something where you're just looking to get into the market and then move later? Like, for some people, that makes a lot of sense. Some people do maybe reach a little bit more. And, one of the things that you referenced there too is, obviously, if they were getting into the market at 20% down, obviously they're saving more. Their mortgage is going to be higher. Maybe if they can afford that, maybe they're throwing some extra money towards their principal during that time. Like, there's a
for
lot of
sure.
individual factors. There's no one size fit all, and that's why we have the disclaimer at the beginning. But yeah, for some people, they just want to get their first place and then, plan on growing into the space and moving again in the future. For reference as well, just to keep us honest, in March of 2023, HPI price on townhomes was 789,700, and in March of 2026, 772,700. So actually pretty
Wow.
close.
Yeah, not a significant difference. And I will speak to the fact that we're creating a scenario here where it's realistic in the sense that we can see these prices change the amount that we're talking about, but
Mhm.
it all depends on area, and it depends on if you have a specific product in mind. It's going to be whatever that product value is at the time. So,
Townhomes
um,
have been a pretty solid, pretty resilient product, and I think that's
yeah,
also too, like, condos, as we've done talked about on all of our stats episodes, condos specifically have really been challenged, more than
mhm,
some of the other asset classes. I think that's a lot to do, with supply and demand, pre-sales finishing. people giving up rental units, all that kind of stuff. We've talked that to death. Yeah, obviously, condos specifically have been a little bit more of a challenging.
For sure. No, and that's very well said. So let's talk about the townhouse today. So we talked about, hey, in 2023, the townhouse was worth 800. Today, we're going to assume it's worth 720. So that's a 10% drop. That may be more in some cases, but in some cases that might be reasonable for that specific product. So that's the number we're going to use. And if we reference back to the townhouse, as Austin just alluded to, we used a larger decrease for the we use a larger decrease for the condo because
Mhm.
as Austin said, the condo market is more challenging. So it's reasonable to expect that there's less demand for it. Therefore, the price may have gone down more as well. Okay, so let's talk about this townhouse scenario. So you know what? 2023 passed. You bought the condo. That's fine. Now it's 2026, and you're like, it's time. I want to get into this townhouse. And most people, and I think this is fair to say, are going to say, crap, I've lost all this equity. I don't have the amount of money I potentially need to now get into this townhouse, and I don't want to sell at a loss. What the heck can I do? And that's a totally reasonable feeling to have right now. Would you agree, Austin?
Yeah, totally. I mean, it's obviously we always talk about real estate being a good investment over a long enough time horizon, but
Yeah,
yeah, we're definitely having tough conversations with people right now, and obviously you're
100%.
doing the same thing on the mortgage side, where yeah, you are seeing people have a considerable amount of this scenario. Let's say is actually I don't want to say fairly common, but um, this is not a one off.
No, and you could almost go as far as say fairly common, but yeah, I think it's at a point where there's enough people that are dealing with this that it's not hard to find somebody that might be in this situation. Um, okay, so let's look at today's condo. The condo's gone down. Now it's worth 720. We're going to look at two different options here. Option one is, hey, I have the down payment to put 20% down, which is 144,000. So that's a big down payment, which means you need about an extra 100K on top of the money you'd get from selling the condo. And let's assume you can do that. That's great. So your payment now is going to be about $3,200 a month, given that interest rates are lower than they were then. And also given that the property value is lower than it was then. So in that scenario, it's great. You waited it out. You got it at 80K less than what you would have paid for it 3 years ago. Your payments lower than it would have been 3 years ago. And that's awesome, assuming you have the liquidity. But that's probably not the most likely scenario, given the fact that you probably don't have the extra 100K that you need. You probably have the funds that you're gonna get from selling the condo, and maybe you've got a little bit of extra that you can throw onto that. So option B is let's do a minimum down payment. Let's just get into this condo because let's get into this townhouse because we need to upsize and we're in a situation where this makes sense to do it. So let's put the 47K down. We're gonna pay mortgage insurance because it's a minimum down payment. Now, the crazy part here, Austin, is your monthly payment is gonna be about 3750. Now, I'm gonna get you to answer me this question, Austin. What would the down payment have been in 2023 if you bought that same townhouse, given where rates are at, and you had to put 20% down? Do you remember what that number was?
So what the payment would have been?
Yeah, what's the payment back in 2023 for that townhouse?
$3,800.
Right, so it's about the same.
Yeah.
Right? And you've put $47,000 down versus $160,000 down back at that time.
Mhm.
You didn't have to see the townhouse go down in value. Obviously, the condo has, but you didn't see the townhouse go down in value. And really, the point I'm trying to make here is that we're in a situation where you could be paying a similar payment to what you would have been 3 years ago. You'd be have less money down, and you can still get into the product that you want at what might be a lower price point compared to where it might be in the future. And what I mean by that is we might be at the low end of what that price is going to be at. I don't
Mhm.
know that for sure, but I think that's a really interesting fact. So, also, I want you to speak to that because I gave everybody a lot of information there, but let's kind of break that down a bit further.
Yeah, so basically what Cole's trying to say is, before higher purchase price, more down payment, higher interest rates equals if you're getting into that townhome in 2023, monthly payment is going to be $3,800. Some context here too. If you're going 20% down, that is a 30-year amortization, so a longer amortization to get to that $3,800, correct?
Actually, no, Austin. Sorry, I'm
Okay,
gonna
so
correct
that's
you
the
because
okay.
everything's based on 25 years, sir,
Okay, interesting.
just to keep it
It's just
simple.
20% down. Okay, gotcha.
Which is actually a good point to make though. But yeah, so just for clarity's sake, all payments have been assumed by 25-year amortization.
Okay,
Yeah.
gotcha. Well, scrap that.
That's
Okay,
okay.
going back. So it's basically, yeah. So on paper, you have definitely lost some equity. You have lost some money. No hiding that. That's reality. That's what it is. However, even with paying CMHC, because you would no longer be 20% down, you would be an uninsured or you'd be an insured mortgage. Your monthly payment is the same. So basically, with this, what we believe is, yeah, on paper, you've lost some equity, you've definitely lost some money. However, assuming when the market does get better, you're going to probably gain that back in the market value category. Is that correct
Yes.
what you're saying, Cole?
Yeah, that's a very good way to put it. There's opportunity for you to make some of that money back, absolutely. And I think there's an argument to be made here to us, and that the townhouse product is historically a stronger product, given that it's the middle product. It's the product between detached homes. It's the product, um, yeah, between detached homes and condos. And actually, Austin, I'll let you speak to that a little bit more about how that product fits well and tends to be a little bit more resilient than some of the other ones.
Yeah, I think you've said it really well, but you have people that, like we've chatted about in this scenario, are in condos going to townhomes, and then you also have
Mhm,
people in detached homes that are saying, "Wow, everybody's moved out. This is more space than I need," and then they, sell their larger property and take a step to the townhome, right? So it's you have people coming and going from it. So, um, and I honestly just feel too, it's a very, very good product. I know that's not a great way to articulate
right.
that, but it's like you've got your garage, you've got your storage, you've got enough space. Like it's a great style of living. I know people hate strata fees, all that kind of stuff,
Mhm,
and blah blah blah. But yeah, it's a very comfortable product that can be a great fit long term for people, especially if they don't necessarily want to reach on their budget and have a larger mortgage on a detached property. Like it can also too, if you're able to time your space or utilize your space properly, let's say, maybe you don't need to upsize to downsize later. Maybe you can just maximize where you're at and make the
mhm.
most of it. So, just some food for thought, let's say.
Yeah, no, I think that's a great point, and I'm gonna reiterate that the point of this episode today is to show that even in a situation that might feel like you're stuck in a hole, you're like, "You know what? I can't sell right now.
It
I'm gonna take."
sucks. Mm.
Yeah, it sucks.
Yeah,
I'm
it
gonna take a
sucks.
huge
Yeah,
loss. There's no way that I have the money now to move up because realistically, most people, their equity is what they would use to buy their next place.
totally,
I mean, don't get me wrong, there's people that have been able to save money, but it's we're in a very difficult economic situation right now. It's not abnormal to not be able to save extra money and just to get by. And that's the
totally.
reality of it. And I don't want to make anybody feel bad by saying that, but that's just the reality of it. And what we're trying to show is that even with that equity that this hypothetical couple has in their current condo, even though that value is depreciated, they still have the opportunity to move up, use the equity to move up, get into a townhome at a price point that's probably lower than it might be in the near future, and then realize some of that appreciation later and end up actually in a better position maybe in the long term than if they had bought the townhouse 3 years ago, which to most people, they'd be like, "What are you talking about? That's crazy." But the numbers do help tell the story here, and the point is that you might not be as stuck as you think you are. It's worth at least having a conversation about, "Hey, am is it possible for me to actually move right now based
What does
on my
that look?
situation?"
What does
Yeah.
that look like? Yeah,
What do those numbers look like? And that's our job, and it doesn't come with any strings attached. I can do this for anybody, and we can sit down for 30 minutes, and I can go through this with you, and I can show you how all the numbers work out, and make sure that you understand the situation, and then and let you walk away and think about it and sit with it and find out if it's actually gonna make sense. And Austin can also complement that when it comes to what's your home worth right now? What's a
hmm
realistic number? How much can you walk away with assuming we get that number? And what does it look like to buy something that you're looking for and do the numbers work? Austin and I work very well together when it comes to these things. And obviously I'm hyping us up a little bit here, Austin, but the point is when you have two people that are in the same industry that do different things that work well together, it's a lot easier to solve your problems when it comes to things like this situation. So
Well, one stop shop. So,
yeah, exactly.
well, two stops, I guess.
Two
But
stops, yeah. Well, we
yeah,
can show up at the same time, I guess, right?
like Step Brothers job interview. Anyway, but yeah, so just to be clear on this, guys, like I'm sure you're listening to this and you might be saying, "Wow, that's crazy. People have lost equity, people have lost money," and maybe you're thinking, "Oh, well, these guys just want a listing or they just want to sell." Like, um, it obviously in our business, we typically get paid when people transact. Like that's no secret. That's how this works. We're not going to sugarcoat that. That's the reality of it.
Mhm,
Um, what we're trying to do here is saying, okay, let's give you information to make an informed decision. Okay. If this is the reality that you're in, but you are facing, you're in a position where it's like, hey, we really like to move. Like that would be ideal for us. We know that we're down money. It is something that we want. What does that look like? That's the episode that we just recorded. It's like, hey, these are the numbers. This is the math. Obviously, there's going to be some variation from client to client. Like there's probably some people as well, depending, if they were less than 20% down, aren't going to be able to do this. Like full stop, transparent.
for
Like
sure.
that's not going to work. I have seen transactions and know of transactions where people are paying money out of their pocket to sell and discharge a title. That's the reality of this. There's people that can't complete on stuff, whether that's pre-sales, etc., all that kind of stuff right now.
Mhm,
There's things going on, right? Uh, all we're saying is if you are in this scenario, this is what it could look like. And then, how bad do you want to move? Would you rather just stay and ride it out, and, maybe keep your smaller monthly payment? Because the other part of this,
for sure.
if we're talking about pros to staying, if you're renewing your mortgage and you were at 5.25 and now you're going to three something, were you 4% on this example?
I was using 4 and a quarter. I was
Okay,
being
four
pretty
and a quarter.
conservative.
Okay, so you're
Yeah,
dropping by 1%. That's great news for you. Let me tell you.
100%.
Yeah, your payment's gonna be going down by what? Couple $100 at
Yeah,
least on a
yeah,
like an average
you'll
size
definitely
mortgage?
you'll save some money for sure, absolutely.
Yeah, or maybe you keep your payment the same and throw that difference at your principal or, make an increase. Like there's depending on what lender, there's different options, talk to Cole. But again, not to get off track. This is what it looks like to stay. This is what it looks like to go. Should we stay? Should we go? That's the episode. Boom, done. What
Yeah, wrap it up, that's it.
Yeah.
But yeah, but as Austin said, really the point here is that the situation may still be possible even though it feels like it's not. Because on paper, most people would look at that and go, "There's no way we can move right now. We don't have
Mhm.
the equity
Yeah.
to do it." And that's the point we're trying to make here. And Austin, I really appreciate that you said that about the mortgage situation because yeah, maybe cash flow wise, it makes more sense for you to stay. But the reality is maybe it doesn't. Maybe you have a kid or 2 or you have 1 kid already and you've got another on the way and you're like, "This two-bedroom condo is gonna get really tight really quickly here."
Mhm.
Um, and we don't think we can move, but maybe the reality is you can and you have the ability to maintain or you have the ability to deal with that extra cash flow that does come with a larger payment, right?
Yeah.
So
Well,
that's what we're trying to say.
and again, maybe the solution is, instead of, with this information, maybe it's something where you decide to like, because this scenario, it's people coming up for renewal after a 3-year term, basically, right? Like if it
Yeah.
was 5 longer, it might be more challenging, whatever. Sorry, I don't mean that in a bad way. Everybody's scenarios, we can't run through all of them in
For sure.
half an hour.
There's a cost to breaking the mortgage early if it's
Yes.
not coming up for renewal,
Yeah.
absolutely.
Maybe the solution with this math is maybe instead of going for another 3 years, maybe you're going for a 1 or a 2-year term. Maybe it's like, "Hey,
Yeah.
let's just punt this for another year and see if this scenario is much different. Maybe we don't wanna do it now, but if we're in the same position a year from now, maybe we do it then," right?
Yes.
Everybody, how bad do you wanna move?
Yeah, this is a very specific example, but what Austin's highlighting is that we're gonna make sure that it actually makes sense to you.
Mhm.
If you come to us and say, "Hey, is it even possible for me to do this?" And we'll show you that, yeah, it is. This is what it's gonna look like. That still might not be the right decision for you. It might make sense, as Austin said, to kick the can down the road for a year or 2 because that's what you need right now and that's what works for you. So that's where we're coming from. We just wanna give you some insight on what a realistic or semi-realistic at least situation might be, and that the possibility might be there regardless of the fact that there's some negative, you've lost some value in that property. Um, I think that's pretty much all I got, Austin. Anything else you wanna touch on there?
Nope, that's been quite the episode. I know it was a little bit more sarcastic and more casual, as much as we had an as much as we had an itinerary and a topic to follow. But yeah, it's been busy. It's been I know, like, Cole and I have been working on a couple files together. Feels like we're kind of getting that spring market. It feels like it's
Yeah,
starting a little bit lower or later than it normally does. Interesting to see what happens. We're starting to see a couple more deals come across both of our desks, which is great to see. Um, so yeah, it'll be an interesting next couple weeks. I know. I think 2 years ago when we had a bit of a lull, this is when things got busy, and uh, we ended up having to take a little bit of a break from the
a little
episode.
bit
There
of a
was
hiatus.
yeah, there was
Yeah,
the infamous we've never been so back clip that we had, but we're trying to fit the episodes in wherever we can. It's later at night. Everybody's asleep, but we're recording. We want to make sure we can get something out to you guys. So yeah, it's interesting times, very interesting times.
for sure.
So anything to add there, Cole, or should we wrap it up?
Honestly, I'm just curious to see what'll happen because you highlighted the fact that it feels like the spring market is starting a little bit later. Does that mean it pushes into summer? We'll see. I mean, that's not a topic for today's episode, but yeah, I'm definitely curious to see what happens with the market. It's showing some it's showing some strength, I guess, is fair to say right now. It's showing some positive, and I mean, listen to our last episode where we talked about stats for March. That'll paint some better light on what we're talking about here. But yeah, it's showing some, I guess, positive momentum more than anything else.
Yeah, I think, and obviously we don't want to like start a different topic, but I've seen some things about rent prices are down a little bit again. I think it was 18 months in a row. That might be
Mm,
incorrect.
okay.
It almost kind of feels like listings are up, but it feels like it's not as high as they were at this time last year,
Hmm. Okay.
which I think is interesting. March, yeah, okay, actually roughly the same, or that's just townhomes. Let me look at all listings. March. Yeah, maybe it's lagging a little bit behind, which is curious. Like I almost wonder if like a bunch of the people that maybe couldn't sell are just trying to like hold on a little bit more and then rent out their
Mm,
property instead,
yeah.
which is kind of interesting. Obviously, rent prices are going down. There's a lot of rental inventory right now, so that's interesting. So yeah, very curious to see how the next couple of months play out, and that's why you listen each week. So thank you guys for joining us for another episode. Make sure to subscribe if you have not already done so. That way you get notified as soon as we post an episode. And of course, leave us a 5-star review. We do appreciate it. And yeah, if you're listening and have any questions specifically about the market, you're thinking of moving, maybe you need mortgage info, maybe you want to find out if you're thinking of moving what your place is probably worth, don't hesitate to reach out to either of us and we would be happy to help. And we'll see you guys next week.
Thanks, guys.